with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. Happy Thursday. Welcome back. A1 Trading here, 10:17 a.m. Eastern Time on the 12th. Price action looking like we're just trying to do a little bit more melting up, a little bit of quiet morning, which was perfect. This is what I'm seeing on my end. So this is the SPX with some gamma levels to the upside. The SPY probably targeting 560 today. That's the level that I'm watching that stands out the most. So right here in real time, this has been growing from about 255 net to now 450. So I wouldn't mind. Let's see here. I think we have price that wants to rip a little bit higher. Let me see what this is going to cost. This might be pretty inexpensive. If anybody's interested in a SPY trade with me, SPY for tomorrow's expiration. So there's two ways to play it. Today's expiration is going to be really cheap, but I want to make sure that we get there. If I put in a 560 long call, it's going to cost me 30 cents. Now, if we get up there in a decent time, we might be able to see this 30-cent call option trade for $1.50, which is obviously a pretty good ROI. If I go out to tomorrow and I buy the 560, I'm going to pay $1 for it, but that's also within my expected move. So this could also increase in value. I'm going to go ahead and take this trade. I'm going to get after this trade here. So a 560, let me see. Let me just double check this. So 560 for tomorrow. Let me take a quick look at price here on the SPY. 560, the highs of, yeah, this is fine, dude. We're coming back in this level. We're going to eat away that candle. All right, let's see when we get up there. I'm going to go ahead and buy this for 93 cents. I'm going to buy the 560 out for tomorrow's expiration. So let me see if I can get this filled for 95 cents. Filled at 93 cents. Okay, so that is a little trade update for me. That is an index trade, but that's actually, well, it's kind of a stocks and options trade, but I'll say it's an index trade. SPY 913 expiration 560. So buy the 560 call, 93 cents debit. So if price hits 560, I'll roughly calculate what I want my profit to be. So 560, we're at a 555.90 right now. So that'd be a $4.10 move at a 25 delta. I'm looking at about $1 profit. So I'll say $2 credit profit target or greater. If SPY hits 560, look to protect profit. Okay, so that is a trade here. Go down to a smaller time frame. Looking to see, actually, you know what? I'm going to take this chart. This is a better image to see. Take a screenshot here. And I'll go long, buy, 560 call, 93 cent debit, SPY 560 price target. Okay, and then I will point this right there, make this yellow. Perfect. All right, so I can copy that. I'm just throwing this in the alerts for my trade signals. There it is. And for all you A1 traders out there, there we go. Okay, so I just posted that in the alert section for the A1 trading community under Chris's trades. I put that in the index section, and I'm giving myself the day. I mean, I love zero DTE, and this is awesome to like, oh, I turned 30 cents into $1. That's an awesome return on investment. But in the event that we don't get to 560 today, then that trade is going to be worthless. So I'm giving myself a little bit of time, see if this market wants to continue to melt up towards 560. So that's the trade. Let's go back to the daily time frame, and off we go. Okay. So yesterday was look, if you're not a daily active, watcher of the charts, nothing really was on your radar yesterday because there were no like outlier numbers. But if you were in the market like we saw yesterday, yesterday was a freaking wild day, right? I mean, I don't know if you're aware of this, but the SPY was down about 1.6% yesterday, right out of the open, and then proceeded to rip about 3% higher. It was like 2.8% to the upside later in the day. The Qs were down, I want to say over 2%. Let me check that here. I think the Qs were down close to 2% and then ripped up 4% intraday. That was just a wild, wild day. Doesn't seem like much for that downward move, but that was no slouch. 1.84% to the downside, and then a rip of nearly 4%. So we closed out yesterday in here around 3.9% to the upside. Wow. Crazy day. One trade that worked out pretty well, and I'm going to actually got to log into Thinkorswim for this reason. I still have an ES butterfly spread that actually worked out really nicely yesterday. That was also in, if I go into Discord, here is my trade section here. So if you're subscribed to my alerts along with Frank and Nick and Elvin, here's my futures trade. So right here, this was the trade that I took with a 9/11 expiration, and it was the right profit trap that was spot on. And I got out with a good chunk of profit. I got out early. And I say early, it's like I was out of the trade in the afternoon, but here's what it actually looked like. This was kind of crazy. Okay. Can everybody see this right here? I don't know if you can see the number. Maybe you can. Look at that. Okay. So this was a $3 debit that was trading for 22.70 credit. There's not more bang for your buck than I can see than that trade right there. Now, is this trade something I win all the time? No, I probably win like, 1 out of 5 or 2 out of 5. But if I can get that type of payoff, I mean, who cares, right? If I net here 22.70 minus the $3 debit, that's a 650% return on capital. That is a crazy, ridiculous trade. Okay. So, and I paid for the other one. So net, like I lost on the put side, but it didn't matter. Like the call side was perfect. So I was really happy with that trade yesterday. That helped make up for my bonehead play of trying to call the broke wing butterfly on the NDX with Frank in the session. And look, Frank, he's like, why would you go after 25 cents? And I'm like, I'll go after 50 cents. Well, it didn't matter because I ended up losing like $1,100 on the trade. So the nice thing is this trade got me out of trouble. Ended up making some net profit on the trade, and I actually had the same thing running. Let me get into my platform here. I had the same thing running right here. So I'm in the same situation as we're drifting up possibly higher. I might be able to trap this on the call side as well today. We're going to find out. So anyway, good stuff. Right. So I'm going to log into my Thinkorswim. I've got that trade tracking in real time, and I can also analyze it. I guess I can just go to my Tasty platform here. So here's my trade right there. Today's expiration, it is it's on the call side. So 1, 2, 3. Let me analyze this. Boom shakalaka. And look where we are. We're actually in my profit trap. Okay. Now, if I look to close this position, right now, I had a 250 debit that's trading for about $7 credit. So right now we're already in some good shape. Now, if I go back to the analysis section here, 1, 2, 3. Okay. What are you guys doing? Sometimes this analysis section kind of annoys me because I just have a lot of trades. But here's the call. and analysis. There it is. Okay. So we're sitting in the profit trap. I'm trying to zoom out to get this thing to, oh my gosh, this is so annoying. There. So we're sitting in the profit trap. It's trading for about $7. Now let me do the math on this because technically my break even is $5 because I have 2 trades on. Okay. So 250 and 245 means I put in a debit for 495. Right now I'm trading for about $7. So $7 minus the 495, that would be $2.05, right? Okay. Times a multiplier 50. I'm currently sitting up $100 on the trade. Now, profit wise, I'm going to look to see if we settle in around, this pin price is great. I want to see if price just kind of chills for the day. Later in the day, this will become more and more profitable. So I don't know. I think for right now, I'm just gonna let it do its thing. Here's another way to look at this trade. Okay, these bottom two. Let me zoom in. Oh my gosh, there. That's better. Okay, now this is my trade. So I have some profit. What I'm looking for is if you can see this little purple line in the background, that is the actual P&L right now because we still have some time in the trade. But as this day goes on, this becomes the purple line will look like this, and it becomes pretty much exactly like my constructed trade. So if we just kind of hang out here, maybe go up a little bit, down a little bit, we just kind of stay put. Later in the day, this thing gets higher and higher in profit. So I'm going to go after a nice little peak profit today if I can, and try to turn hopefully what's a total of like a $5 debit into another, $15, $20 credit, make a nice little net chunk of profit. So that'll be the plan on ES today. Yesterday was a good day in the portfolio. I did some management on Pfizer. I'm looking for some maybe buy calls, or some, not some buy calls, some actual some buy right strategies where I buy shares and put on a covered call for a couple of things. But let's do this. So yesterday, I know Frank and I came on. I didn't really get a chance to do much analysis yesterday. So yep, I see Sean's asking for Nvidia. Where'd you put a stop loss on the SPY? So if you're long the SPY, and I don't know if you're long at support yesterday, that's a great trade. If I started anything long in the SPY yesterday, I'd have a stop loss in profit and break even and just see if this thing wants to rip and pause and rip and pause. Look, we all know what's coming next week, right? Fed's coming out next week. They're likely going to cut rates 25 basis points. I think this market is overly excited, but I don't think the market really has what it takes to blow through the top. Now, I could be dead wrong, but you know what's going to happen next week? The Fed's going to cut by 25 basis points, and they're going to try to be firm on why they're only cutting by 25 basis points. You know, so this is going to be like a slow, steady Fed, so they say. Now the market's pricing in something different, right? If you look at the Fed Watch tool, we're still at a super high probability that we're going to do a 25 basis points cut next week. Now, if you don't realize it, this is a very good thing because cutting by 25 basis points means that the Fed, and I think they got really lucky here, okay? Because the employment stuff is a real concern. It's showing a massive slowdown. It's showing the trends are going in the wrong direction for the employment stuff. But inflation is a little bit better, right? The year over year dipped a big way, but you can thank oil for that. Oil's down 20+%. That's a big contributor to why CPI is lower. Okay. Shelter's still lagging. Shelter's still sticky. That's why we had that slight uptick month over month. But the CPI year over year was down in a big way, 2.9 previous to 2.5. Today's PPI was slightly higher. If you look at the news from the screen, it's slightly higher. But my point is, cutting by 25 basis points, that's the Fed getting pretty darn lucky. And the reason why I think they're lucky is because if they were to go in and do an emergency cut at 50 basis points to appease the market, it's really just showing that they miscalculated, they're behind the curve, and they're trying to play catch up with a slowing economy. Now it's crazy how it's that sensitive. But I think the Fed is lucky that they can cut by 25 basis points, and then the narrative can be, we think that this is appropriate and we think this is fine. We're going to continue to watch data trends, blah, 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 blah. They can stick to the same narrative and the market can take it for what it's worth. But the Fed is going to cut rates. Okay. They're going to cut rates, and out to the end of December, the market's anticipating a pretty big dose of rate cuts. And even for the rest of the year, 25 basis points in September, November's highest probability is that we're going to have another 25 to 50 basis points. Okay. So this is pretty much a split right now. And it's either a 25 basis points cut or it's a 50 basis points cut. It's about 50-50. But this does tell us that the Fed's cutting, and then December, the Fed is probably cutting again. So the cuts are starting, and this is pretty aggressive because usually it'd be like a September, December only. If they're going to cut September, November, December, it's pretty aggressive. And what's interesting here is look at the where's the probabilities? You can see there's a jump here, right? We go from September to November, the probability jumps. Okay, that the higher probability right now is edging towards a 50%, or I'm sorry, 50 basis points cut in November, and then another 25 in December. But I think you could maybe flip those. It could be, either way. I feel like by the end of the year, right now the probabilities show that the Fed's going to be cutting by at least 1% by the end of the year. That's pretty substantial, right? That does a lot of things for this market. Okay, yields drop, bonds go up, possibly, right? And if the bonds already price this stuff in, so be it. But is this a buy the rumor, sell the news where now we know it's official, the Fed's going to cut? They didn't, the market's not getting overly worried. And so I think that's what really was the good thing yesterday was like the market's like, okay, we can breathe a sigh of relief on inflation. We'll deal with the employment stuff as it comes in over the next 30 to 45 days. But the Fed's going to cut rates and continue to, kind of start that process. So anyway, it's going to be interesting to see where we're at. I think all-time highs might be a little challenging. I did put in a broken butterfly pending order, but based on my broken wing butterfly decision yesterday, that one sucked. So I don't really want to put that trade in here. September 19th, that's next Friday. 20. So I mean 20,000. Let me go back to let me go NDX. I don't think this is at the all-time highs. Son of a gun. I'm going to cancel that trade. I got burned yesterday trying to call that top. I don't want to get burned, next week calling that top because that is, the max loss at $1,500 because I'm taking on such a massive credit. I guess it's not that big of a deal, but could the Nasdaq rip over the next week? Could it rip up 3%? You bet, because we just saw it from this yesterday's candle alone. It's already up 4.25. So it can absolutely go and test that high. So for me, this is probably the better trade. So I'm going to cancel this position because I don't want to call the top right there. I'm not going to. So I'm going to cancel that trade. And that means in my alert section as well, I'm going to go into, this would be, I'm guessing, index trades. Yep. So I have a 9. Yeah. So this is it's in my alert section here. So this trade, I'm going to update this right now and cancel this order. Okay. So this is going to be edit message, update, September 12. I am canceling this order. Effective immediately. So it didn't fill. All right. And I'm fine with it not filling. I'm fine with just getting out of the trade. So let me see if I can throw in a little sticker here that shows cancel. There we go. So I'm going to cancel that trade because I don't want to call the top on the NDX. All right. If this thing rips another 3 to 4%, that trade's going to bust me up by another $1,500. And I'd rather, go with the flow. If this thing's going to push, I'd rather be bullish and doing bull put spreads. That's way easier. All right. All right. So I'm going to go in here and cancel. This is working, so I can cancel. And just give me about 30 seconds to knock these out in everyone's account. So cancel. Okay, I'll take a look at Apple. I'll look at the indexes. Yep, I'll go through some analysis here. Okay, cancel. Cancel. And cancel. All right, so those are all cleared. Make sure it's not in this account. Okay, we're good. All right, moving on. So let's have a look. Let's just go top down. So SPX, Not a huge surprise that we're sitting here right at resistance. So look, the market covered a lot of ground yesterday, but let me just throw a question out there for everybody. Okay. If this was the sell off from Tuesday, right after Labor Day, and we broke this structure and we stall right here, is anybody super surprised by that right now? So we just covered a lot of ground yesterday, but we ran right into resistance. So I wouldn't be surprised if next week we're sitting right here during the Fed or coming into the Fed meeting. Why? Because the Fed could give us the catalyst to go up or the catalyst to go down. And it's not going to be instantly on Wednesday, but I'm saying this is the direction I'd be looking for. The market's going to be looking for some type of catalyst to move, and we could be right here like perfectly balanced. And it's amazing how the market does this stuff. So we happened just to get back to equilibrium yesterday, but if the market's sitting right here going into the Fed next week, okay, well, the highs are right there to go after. And then we can also revisit the lows if the Fed says something that the market doesn't love. And what would that be? Maybe that they're going to, maybe scale back the pace of their rate cuts, and maybe things change for November and December. I have no idea. But the likelihood of a rate cut for next week, Wednesday, is pretty much baked in. The market's been toying with the idea all year of pricing it all in, and then we're finally there where it's like, it's here. So that buy the rumor, sell the news is very much a thing. And anyway, we're right back at resistance. So this structure, it's right there. If we are up higher than that, if we're up higher than that, then I would say sure, any pullback is looking good for a dip to see if we can retest the highs. But don't be surprised if this market doesn't really do much justice to break the highs. I could see it testing and then failing. Okay. I could also see the market testing, right? And then pulling back again, but then still having a chance to go higher, low, higher, low, higher, low. And then we're just talking about continuation and resumption to the upside. But maybe this ends up giving us a rising wedge later. But right now, until proven otherwise, the bias is stops are going to be sitting right here, and we're going to see if this market can hang on to yesterday's rip. Yesterday's bullish move was so aggressive that I think it cleared out a lot of sellers, right? Meaning the market doesn't look very bearish right now. Okay, but if price proves otherwise, then we'll have that conversation. But right now, I'd say I'm leaning towards upside for right now. I'm going to see what price does. Right, so that's the SPY SPX combo there. I do NDX next. The other thing on NDX would be right in there. So is the Nasdaq able to, challenge that high? Maybe. But if we also come right back into resistance, we have this cluster and that becomes resistance, we could also see the Nasdaq turn. And this might become like a perfect channel where we have like high to low, we have it in here, but it ends up washing itself back down. If for some reason price provides that type of support or that materializes, then I flip, right? But if price is up here in open space, then it's bullish and it's looking to be bullish, and we're targeting all-time highs again. The nice thing is if we see it, if price is up here, then we have stop losses or tighter stop losses. We go after all-time highs. There's at least a place to measure that move, and there's some gains. So, being bullish to that high makes sense. All right. But we're going to see how we can kind of survive the month of September. Right. So Qs, very similar to that. Let's go here on the Qs. Trend line that I'll be watching for. That's micro futures. The Dow. This is my outlook on the Dow. We're making higher lows and higher highs. We're kind of choppy in the middle. I'm looking for the Dow. In fact, I might look at something right here at this low or this low. Let me put on, let's see, that's 385. I'm going to look at like a 385 by 380. I'm going to do this. Put in a DIA trade. So if I go out, I'm going to go out about 64 days. And on the DIA, I'm going to do a 385 by 380. And I'm going to try to get filled for $2. Yep, I'm going to try to get filled for $2. So I'm going to go after a little income play here. So let's go $600 income, $2 credit, 385 by 380 for November 15th. And place. Okay. So I'm going to clone this trade. What is this one? 365 by 360. Ratio spread, that still didn't fill. Okay, so this one is 9732. Okay. All right, I'm going to get this placed here. Similar. Okay, and last one, similar there. Okay, so that is pending. Let me get that in for my tracker. I'll put that in the alert section. DIA, this is, what was that expiration? November something? November 15th. Okay. 385 by 380. Okay, and we have $600 profit for a $900 risk. I'm going after 3 contracts, but one contract is $200 profit for $300 risk. Oops. Okay, so that's going to be a DIA trade. 385. Sell put, 380 buy put. $2 credit pending. Down here, and I'll put in a little trend line. Basically, I'll just box this in. So from 385 down to 380. Right there. Cool. All right, I'll come back to that trade. So that's the Dow. Let's go to the Russell. Similar to the Russell, rate cuts are probably a good thing. Actually, I think the Russell is good enough now that I'm going to see if I can take a trade. This would be 200. I'm going to see if I can get a slightly better fill on the IWM. Let's go out similar expiration November. Okay, what's the 200? 200 by 195. I can get $1 for it right now. I'm going to see if I can get same thing, $2 on this trade. I might be able to get more than that, but if I do a 200, 204, I can probably go a little bit tighter. That's a bit tighter though. So if I did like a 204 by 200, so get 30 cents on the dollar. That's fine. A third of the width is fine. That's a 65% chance of profit right now. I'd like to move this down towards 200. I like this trade. I'm going to do this. 200 by 195. Put in $2. Go after 3 contracts and just take it as a credit spread. So, all right, I'm going to do the same thing there with the IWM. That would be down here. So $200 to a 195. There. And just see if this market maintains like higher highs and higher lows. Now, if price goes higher, then I'm not going to get filled on that trade. So what I'm looking for is if there's any way that price comes back down here to test this level and then find support, then that's how the trade, looks pretty good. So I could see support being anywhere between this $200 low and this 190 low. That's really where I'm watching to see if this thing bounces. If we're going to see higher highs and higher lows for the small caps. Okay. VIX. Sorry to hear that Frank's trade's probably not going too well right now with that big decline yesterday in the VIX. My SVXY is doing fine still. I own the shares at 40. I've got a bunch of puts at 35 and 50. US oil had a decent bounce here the last couple of days. Pretty good support. I did get filled at a 65.50 put on CL. So right in here, I'm looking for that trade to just stay above 65.50. If we go to gold, what's happening, gold? Gold is looking good once again. All right. Well, that just means that take a look at some GS or GC rather. GC currently up $900, $5,600, and copper's up $1,200. My silver trade's up $33 and $2,800. So yeah, some GC is looking pretty good. My GLD should be up a decent chunk. GLD is up about $9,000. So yeah, I've got some good profit running on gold. I still am not in love with buying these freaking highs, really. Okay, I'm not in love with buying highs on gold. But if anybody was in the trenches here and trying to buy it, or buying it in here with a stop loss right below these lows, then you're getting paid right now, which you're probably pretty happy. So what would be interesting on gold is if we have a breakout and a pullback and then another run higher. We could just keep melting up on gold. One thing I want to look at for a workspace. Let's go this one. Let's go this one. And let's take a look at gold because we are going to see some overstretched conditions. Let me see here. So one thing I'm noticing, RSI, so we are making slightly higher highs. So I have some MACD divergence. Okay, we're making higher highs in price. We're making lower highs with volume and momentum, right? Lower high in volume and momentum. Our relative strength from these highs also showing some divergence. So this doesn't mean a top is coming in gold. It just means that we could probably see at least a pause or maybe a pullback. I'm fine with a pullback, right? We have not hit the 200 EMA in a while. This is similar to the S&P, by the way, where this measurement on gold is around 235 bars. It's a little overstretched, So I'm not looking for like this massive pullback, but if price just hangs out for a little bit, right? If price is, I don't know, if it goes sideways enough, or maybe has a little pullback, allows the 200 EMA to catch up to it, then you're looking at support to just kind of hold dynamically, you know. I don't know. So it's a nice little short term breakout, but I'm seeing some overextended conditions. I just want everyone to be aware of that. It's not just, and look, if it keeps going higher, here's where I'm saying I'm going to close gold positions. Okay, if I'm long on gold, I'm going to get out of gold positions when it's doing this type of stuff. It's going to be like a rocket that looks like it is so irrational that it's a broken chart. It's going to be like a Bitcoin rally. It's going to be like a cocoa rally. It's going to be like a lumbers rally. It's going to be like freaking Nvidia for all I know. If it looks like that, then I'm just going to move. And this is perfect out of like Nick's playbook. Take a stop loss, let it makes new highs, move it. Makes new highs, move it. Makes new highs, move it, and just trail. Okay. If it gets ridiculously aggressively bullish and becomes a capitulation move that just looks broken, trailing that, getting out, locking in profit, that's probably the best thing you can do. All right. So that's my thoughts on gold. All right. Silver. Silver also looking pretty darn good. One of my favorite positions. Showed that here. So SI sitting up around 3,300 and 2,900. So I got a few bucks on silver. And then my SLV position is right here. SLV's up around $34,000. So pretty good with that. And this is one of my like bigger built positions. MO is another one. MO is up for me around $81,000, and silver is up $34,000. Those are pretty good. I like those trades a lot, and silver hopefully has a lot more upside. I'm looking for at least a move towards 35. I don't mind doing some more like kind of piling in on gold or gold and silver, probably silver, honestly. So let me see here what I have for some SI trades. So I know I have some future spreads in here. So I've got December expiration, January expiration. Maybe I can go a little bit more near term. September expiration, November expiration. So I guess I can sprinkle in some Octobers. Let me do an October trade here. $26 on silver. See what I can get for October. Let me go to SI. So we have an October 28th expiration, 45 days out. I'm going to try to get my $26 level. It's kind of my line in the sand. So let's see if I can get some decent credit here. So a 26 by 25.50. Ugh. That's gross. So I can make $100 to risk $1,100. No thanks. Let me see if I can do another. There's kind of a unique trade I can put on silver here. Let me try this. If I do a 26 by 25.50, and then I look to finance that 35 cents. If I do the $24 and two of them, and that's a lot of buying power. Fudge muffin. Let me see if I can offset that. I don't know. I'm gonna have to buy like an out of the money put. No, that sucks. Well, maybe what I can do is just sell a put. That's only 125 bucks. Good lord. 560. All right, this is a little bit more. This is fair. So with the 50 multiplier, I get like a $560 profit, but I got to hedge this thing because I don't want to tie up 10 grand. So let me go 26 and then buy a 21. And then see if I can increase that 21 a little bit. So 98 cents. So if I go, let me see what this is going to pay. So I make about $500 income on this trade. Buy power is 23.97. All right. If silver had a vol event, I mean, 24 is out of the way. I like that support level. I think I'm going to take this trade. I don't mind this. $24 and then 21 as a put. So I'd be -1 +4. That way it's hedged. I'd have about $500 of income. I'm hedged to the downside, but it's just an income play. If this goes higher, then this decays, right? And then this would be worthless, but this gives me my income, and I'll still make about 500 bucks by October. I like that. Okay. So I'm gonna get, so I've got IWM, and SI for October. I'm gonna write those down. I want to get those trades prepped and ready. Let's talk Bitcoin for a moment. 57. I mean, Bitcoin is looking good for accumulation. I think you just got to be patient. I've got another workspace here. I'm going to switch this one around, close that. And I've got another workspace here. This one is this guy. Let's go to Bitcoin. Okay, so this actually shows some really good liquidity levels on Bitcoin. And can everyone notice which one stands out? That kind of switched on me, but I was looking for something in the 40s. Let me see if this will update. If not, I can go to the weekly chart. Okay, so I guess Bitcoin's going to go down to $10,000, which it could. No, I'm just kidding. I don't think we're heading there. I was looking for something right here. This is a good snapshot. So this volume profile indicator, I don't know why it's switching like that, but I had a big meaty chunk of volume and liquidity out here around 40,000. And so look, right now we're making lower highs in Bitcoin. Okay. But it still looks like a channel and it's still pretty darn efficient. I mean, this is a good looking chart for Bitcoin to just sit here and allow some accumulation. And at some point, what we're really looking for, there's two ways to trade this. Either you're trying to catch the bottom and get the best possible entry, and there's all these levels of dollar cost average into it, which is probably what a lot of Bitcoin enthusiasts are doing. But the bigger trade, in my opinion, is I'm hoping that price does something along this line. Okay. I'm hoping that price from this high to lower high, if we go another lower high, I'm looking to see when this structure breaks and then start to position for another run to retest all-time highs and then see if that's enough to actually justify a breakout. Because what I could see happening here from a technical side is this is creating a lot of resistance at these highs. Okay. And so if we go down and down and down and down, eventually when the structure breaks, I want to see if we can spot a bullish pattern, carve out a low. We can trade this area where I'd like to be long on Bitcoin for speculation plays, right? And they maybe protect some profit in here, some long calls, some income plays. You can trade Bitcoin futures, something along those lines. And I'll probably do that. And then I want to see if the bigger picture looks like this. And I'm just going to use this huge line. If it was, okay, now we have this type of look where there's a massive head and shoulders or massive bullish pattern, and then longer term, we've got upside on Bitcoin. So it's big picture trading, obviously, but maybe it's out there for the next 6 to 12 months. But I'm just curious what price action does. It wouldn't surprise me if we did that, because it would be everyone gets all excited and then price hits resistance, falls back into all of this same structure. But then that gives like good traders a chance to accumulate more. That gives buyers a chance to really, nail this potential home run to the upside. And I wouldn't be surprised if a trade like this has a swing that somehow gets us to like 100K or 125K. So anyway, that's Bitcoin. Okay. MicroStrategy, that's essentially like trading Bitcoin. I got a bunch of credit spreads and ratio spreads in that one. Plus, they did a 10-for-1 split. So I was happy that they did that. So it allowed me to be willing to say, look, I'll take MicroStrategy. I'm also looking at, I'm exploring like which stocks I'd be interested in owning, because there are companies that are looking to put Bitcoin on their balance sheets, similar to what MicroStrategy is doing. Um, and whether it's the best idea or the worst idea, or it doesn't really matter, I think it's an interesting play, because this chart, if I'm long Bitcoin, I'm long MicroStrategy. So MicroStrategy is great, but there's a couple other ones that, maybe I don't know, it depends, but it's got to be a company that actually does something, not just like, oh, they have Bitcoin, they're awesome. Maybe not. So there could be some other ones out there that I'm trying to research right now. Ethereum is struggling a little bit. I have some credit spreads on this one. This is EETH, one of the ETFs that I trade that has options. And so I'm looking to see if we have a high, lower high. Again, if this structure were to break or this structure were to break, Ethereum is pretty straightforward. We have this support becoming resistance. If this low can hold, I'd like to see this obviously get back above this level and go higher right there. So I'm looking to see if Ethereum can come back up and retest the highs. Okay. If it continues to go lower, I'm just going to watch, right? I'm just going to watch and see this low. If we go a little bit lower, then I'm just going to wait for this structure, then give me a chance to turn. I'll probably trade some more credit spreads. I might get long the EETH because it'd be cheap enough to maybe take a spec play where I can buy it here, stop loss below, and then see if this wants to run. So between Ethereum itself, Ethereum futures, and EETH, that'd be an ETF that I can trade. Okay. All right. Let's see. 6J is the futures market for the Japanese yen. We did breach these highs yesterday, actually, but you can see the retreat off the same levels. Look, don't be surprised if you're watching the Nikkei and watching the Japanese yen. You just have a lot of volatility. So we had that huge run during that July bottom and that August 5th top, essentially, on the Japanese yen, but the bottom in the stock market. I wouldn't be surprised if we have a lot of this going on. Okay. And so I'm not really that interested in trading it right now. Would I look at like a bear call spread on futures? Maybe, maybe for the next, I read last night that, Bank of Japan is looking at possibly raising the rates up to 1%. That's not great for this whole carry trade situation. That's not great for what's been notoriously like the most radical dovish bank in the world, that if we're starting to normalize with other banks, but they've had a bit of an inflation flare up, and they're trying to also bring that back down, just like everybody else did the last couple of years. Okay. All right. So anyway, let me take a look at this right here. 0071. I'm going to take a look at 6J right now. So 6J is Japanese yen futures. So the nearest contract I have is October 4th, which is out 22 days. And I'm pretty sure that next week with the Fed, we do have Bank of Japan as well. Probably not the best trade for me to be watching, but I want to just price one out and see with yesterday's high, 0.0071, 0071. If I did a call spread, I can define the risk and, make $137, risk 175. If I am right, it's a little income play. All I need price to do is stay here. That's it. If price stays there, then it's an income play. I could see that happening. If we were to fall back down, then that gets paid. If we come back down to this level, I'm probably looking at bull put spreads on 6J. So this means Japanese yen gets stronger. That means risk off trading as well. I don't know. The markets yesterday seemed to be a little bit very risk appetite focused, but I'm I don't know. I'll come back to this trade. I kind of hate the yen enough where I'm like, I'm stupid for even thinking about this. The Nikkei, we are heading up again. I don't think the Nikkei is going to do any real stretches to these highs or lows. I think the Nikkei is just going to do this. It's going to fumble around a little bit in here. I know Nick is short on the Nikkei, and I think from up here, I mean, the Nikkei probably has room to sell off, but I'd like to see if we can actually come and test the lows. But the ramifications for that trade is this is risk off trading. If we have a stronger Nikkei, or I'm sorry, a weaker Nikkei and a stronger Japanese yen, that's risk off trading, which will probably bleed into the US market. Which I said this earlier this week, and I've said this for the last couple of weeks. If you're watching a 200 exponential moving average, and that's on my workspace here on the S&P, I still think that level can be tested. Okay. So, and this isn't me saying that we have to have a top, but if this market struggles to break highs, I mean, I don't know if September is just going to be more of this. Maybe September is here and here. Okay. Or September is like that. And we just go sideways. We get a little bit more narrow. And then we look to see, like, as we come into the election, well, there's a possibility and there's a possibility. Now, I'd say this is the higher probability because that's what the market likes to do and finds a way to rip through the end of the season. But if we break down, like, that's obviously going to scare the pants out of everybody because that reality could be pretty nasty. That we've capped out, you know. But with the Fed going more dovish, there's going to be fiscal spending like freaking crazy with a new president, new administration, whatever it is. It doesn't matter. There's no such thing as austerity, right? We are a debt society. We're a debt country. We grow by debt, and it's a problem. But fiscal spending is still going to happen. Whether it's Trump, whether it's Harris, it doesn't matter. Both sides are going to spend a ton of money. And if you don't realize it, that's what's kept this thing post-COVID afloat, right? The market, the bear market we saw in 2022, fiscal spending got us out of that. And then the AI stuff and the Mag 7 that was like kind of, latched onto by the markets, that was the theme, but fiscal spending was just putting so much money in the system that it helped to sustain this bull market. So here we are again, like you're going to see more fiscal spending. So it's hard to be super bearish. It really is. Now, I think corrections are great. I think corrections will be awesome, but it's hard to be super bearish. So I'm certainly more of the camp that this thing, whatever it looks like, whatever we have structure wise, I can see some indecision, but I can see this market just making its way up, trying to grind higher. And that destination would be 6,000, right? 6,000 on the S&P would be the destination. So I'm kind of keeping that in the back of my mind as a target. By the way, hey, James Chandler, do we have somebody coming on? Am I running late for Nick? Is he behind me? Let me know if you need to Sandman me and pull me off the stage. No one else. Okay. No one else. No one else. Just kidding. All right. Let's take some more requests. I'll get to some currencies here. I did oil, gold, silver, did Bitcoin. We got some Mag 7s. Everything ripped yesterday. 30-year mortgage down to 6.35. My bond prices are doing pretty well. I'd like to see my TLT get up. I'm going to put in 6J as well. IWM, SI, 6J, maybe on the 6J. And then I will go into TLT. TLT's up around 12,000 bucks right now, and hopefully there's more to come because I'd like to see my symmetry level hit. This is probably not the best chart for that. Here's my symmetry level on TLT. Or yet there. So this is how I'm measuring it. We have a nice swing from low to high. Oops, what the heck? Hopefully I didn't mess that up. And then a higher low to higher high. So that's my symmetry play on TLT. Now, I'd love it to go higher. There's obviously a lot of resistance over here around the 108 to 110 handle, but I'm happy. I've got a 103 sell call against it's a diagonal spread. So I've got an 82 long and a 103 short that's creating my 21 point wide credit that I can max out at. So I've lowered the cost basis down to like 11 and change, and I'm hopefully going to close out about $3,000 or $4,000 per contract, and see if that hits my symmetry at 103. But 105 is my target actually. Okay. How will the Fed affect the pound dollar, euro dollar next week? What's your prediction? Let's talk about that. Yep. Thought about the election. What it means tomorrow. It doesn't freaking matter. I don't think it matters. Okay. Look, the election, the market doesn't care about the election. Okay. The market cares about policy. That's really all that matters. So if Trump wins, the one thing that would be the most impactful for the election as far as how the markets are going to take it would be, I think, a Donald Trump victory could potentially mean like a Republican sweep. And that means that Congress and Senate and president would be Republican. That policy regime would be what causes the market to move the most, right? I would guess it'd be favorable, but also inflationary because we're going to have tariffs. We're probably going to have more deglobalization. These are probably way more inflationary pressures in the peripheral. Harris is probably more of the same. And I don't know if that's good or bad. Everyone seems to complain about it, but we're sitting here at all-time highs. The markets are up. The Fed's doing its thing. So you tell me. I mean, it's certainly it feels crappy out there post-COVID. It's not the same. There's a K-shaped recovery where some are, a lot of people are recovering and they're loving it because they've been asset holders forever, and then others that aren't are behind and things are more expensive, life's more expensive, and it freaking sucks. So all I'm saying is, unless there's a sweep where the president is also impacting a full-on a policy shift where it's going to be like this, like absolute power for one side or the other, I think that's what the market's going to take into play. So if it's a gridlock situation where Trump become president, but we have, Democrat House, Republican Senate, or vice versa, it's still gridlock. Same thing for Harris. If we have gridlock anything, it's going to be more of the same. But both candidates and both administrations, likely fiscal policy is a standard. Fiscal policy to the upside, adding more stimulus, it's probably going to happen either way. So that in turn would be good for assets like the stock market. A weaker dollar, a weaker Fed, a dovish central bank, along with other central banks cutting rates. That's probably good for gold and alternatives. I like gold and silver a lot. I like Bitcoin a lot for that reason. Commodities, if we have a weaker dollar, that tends to help. The one thing that really needs to figure itself out would be oil. I mean, global demand has been terribly low, and China's been quiet, and the US is producing oil at record levels. And I really think the big contributor to that 2.5 CPI print from yesterday was oil dropping 20+% in the last couple months. That's a huge factor. Okay. So some currency pairs, how does it affect? I mean, we do have next week, we do have a lot of central banks. So the ECB, by the way, just cut rates today by 60 basis points, right? So did that do anything to the euro today? I need to go currency strength chart. Let me make sure. Okay, I'm good. I thought I had, yeah, webinar is fine. So today we have a weaker Swiss, good. We have a weaker yen, good. Baseline dollar, pound is up, euro's a little bit higher. So even with the rate cut decision, euro's a little bit higher. Okay, so be it. Aussie, New Zealand up there a little bit. Pretty quiet on the forex side for volatility. What was yesterday, by the way? Yeah, this was yesterday. Crazy week Swiss, which I'm super happy about. And also the yen was just all over the place yesterday. That's wild. Anyway, so as far as the impact, I mean, next week we do also have the Bank of England, if I'm not mistaken. So we've got the Fed on Wednesday. Okay, which they're expecting the 25 basis points cut. Hooray. And then we have the Bank of England on Thursday. I don't see a forecast here, but I'm curious if they're also projecting a cut. Okay. I don't think that the pound dollar is going to be like a carry trade necessarily. I think the best thing to watch is going to be the dollar. We also have the Bank of Japan next week as well. I don't think they're going to raise rates. Okay. But man, they could be really disruptive if they do. If they slip in a 25 basis points hike or like even a 0.1% hike, I don't think this is going to be the case. But if they did, I think that would be a huge surprise for the market because nowhere have I heard that as the plan for the BOJ. Although they are saying that whatever their timeline is, they're looking at being ultimately around 1%. But their timeline could be infinity. For a decade, they literally held rates at 0% or negative interest rates. And that's their timeline. So there's no time to really understand like what the BOJ is going to do until they do it. So that's why I hate the Bank of Japan and I hate the Japanese yen. Love the country, love the culture, but hate their currency. It is a beast to trade. So I don't know, but that's all next week. So there's a lot of volatility next week. The dollar, the pound, the euro just cut rates today. It's sprinkled in there. The Swiss is also, I believe, the following week. The Swiss National Bank is also have another rate decision for the end of the month. So I think when the dust settles in September, I go back to this chart here. What's the dollar doing? To me, the dollar has a really strong case for some support technically. That's really it. If I'm making a pretty simple trade right now, I'm long the dollar with a stop loss below, and I'm looking to see if this wants to pull back into this midpoint range. I'm looking to see if this wants to pull back into maybe this trend line area. But you can see like reward to risk, it's a little favorable. And then if it keeps going, it's really favorable. But my stop is quick and painless. If we see a big move to the downside in the dollar, then you're trying to, chase this lower and high to low, lower high to lower low. You got symmetry and we see a weaker dollar. And I've said this for months now. If the dollar gets weaker, that's how all this goes higher. Stock market goes higher on a weaker dollar. So the dollar's really, I think, the magic puzzle piece here to figure out where the heck are we going with these currencies? Where the heck are we going with the stock market? Where are we going with gold and silver and Bitcoin and all these other assets that are tied to the dollar? All these things matter. Okay. All right. All right. Anything else for today? So what I'm going to be doing for the rest of my day, I'm going to be keeping a close eye on the old ES today. So there's 1, 2, 3. There's my analysis. We're still in the profit trap. Unfortunately, I need this to I just need this to chill out, like chill the heck out, and see if my P&L, like this orange line that's in my Tasty platform, I need to see if this orange line will end up getting more along the lines of my real P&L trade. And hopefully this will stay trapped and pinned. And I can turn this. It was about a $5 net debit between, I had both sides of the trade. So if I can turn this into, $15 like I did yesterday, I'm probably going to take some profit, or I'll learn my lesson and I'll move my stop loss because I love the fact that thing traded near $23 yesterday. So if I can start trapping profits and move this thing up and get like $20 or better, I'll be really happy on that ES trade. Okay. All right. Thanks. I'll wrap it up there. And happy Thursday, everybody. And we'll see ya mañana. Okay, thanks. Take care. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.